Good morning. It is the 3rd of May. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
How you doing? All right?
Yeah, very well, thanks.
Good, good. I just see that we had some issues streaming this to TradingView, so I'm not sure it's going to be going through today, Steve.
Right, okay. All right, well, I can
Um,
try and work on that while you're chatting away.
Okay, cool. I'll leave that with you then. Okay, so welcome everybody. Latest instalment, obviously starting this week on a Tuesday. It was a bank holiday in the UK yesterday. There were some markets that were open, notably the US markets, and I think they had a bit of a tumble. So we'll come on to the charts on those shortly. But prior to doing that, we will get through the latest headlines. So we got those up in front of you right now. US manufacturing index at an 18-month low. The US ISM manufacturing index retreated to 55.4 for April from 57.1 in March, which was significantly below consensus forecast of 57.6, and also the lowest reading since October 2020. So that obviously has caused a bit of concern. Off the back of that, we have seen US bond yields continue to move to the upside. Although the data was weaker than expected, there were further losses in the US Treasury market on Monday. The 10-year yields advanced to touch 3%, which is its highest level since December 2018, as markets fretted over underlying inflation pressures. The US dollar continues to hold around 20-year highs, maintained a strong tone overall in global markets amid expectations of aggressive Fed tightening. And it's going to be a very busy week this week for central banks. So the first central bank to kick off this week was actually the Reserve Bank of Australia. And following their policy meeting, they've increased interest rates 25 basis points to 0.35%. The consensus forecast was actually for a smaller RBA increase to 0.25% overall. The bank noted that inflation had increased more than expected, and a further increase is expected in the short term. So that's kind of setting the tone now for, I guess, what we're expecting for the rest of the week. Eurozone inflation is also at a fresh record high. The CPI number hit a record of 7.5% for April from 7.4% previously, but that was in line with the consensus forecasts, and the comments from the ECB officials will continue to be watched closely. China is a bit reserved when it comes to the increase there of rates. The PMI index dipped to 47.4 for April from 49.5 previously, which was slightly below the consensus forecasts. And the data maintained concerns over the Chinese economic outlook and also hampered risk appetite. And of course, sadly, the situation with Russia and Ukraine continues to escalate, and fears have continued around that. The market remains nervous ahead of the Russian Victory Day on May 9th, with strong pressure for President Putin to be able to demonstrate some clear victory by that date. And that is only 6 days away. So, yeah, really interesting week ahead is planned by the looks of things for the market. And I think, Steve, that's a pretty good opportunity for us to dive into some charts. I will
Yeah,
start off with FX if you want to continue
okay.
playing
Yeah,
around with bits and pieces in the background.
yeah, absolutely.
All right, fine. Okay, so let's go straight into FX then and look at the dollar index. And as we talked about in the headlines, that is continuing to hang around 20-year highs up at this 103.82 level, which is this red line here. And we have to go all the way back to these levels here. 2016 was the highest level we previously saw the dollar index at. We have just gone above that. And the last time we saw that level was over 20 years ago. So no signs of this slowing down at the moment, still remaining stubbornly high. And of course, that's having a big knock-on impact to anything else linked to the US dollar. Euro US dollar continuing to trade down at these lows. 104.70 is the new line of support, which was the low that we posted on the 28th of April. Below that, we have this support down here at 103.40. And if we scroll back to the left-hand side, we can see the last time it was at that level, and it was back in January 2017. If we take a look at cable, similar sort of situation, remaining stubbornly low following this big move to the downside. Prices continue to cluster around this region, which is a 61.8% Fibonacci retracement level. and I think we're set to sort of maybe consolidate around here in the short term, but clearly the pressure remains on the downside, and if we see prices slide below the lows that we posted on the 28th of April, then that could trigger a fresh corrective move down to this 78.6% Fibonacci level at 120.25. Just taking a quick look at some of the Aussie markets, because obviously we had the central bank taking action overnight and increasing rates by more than expected. It actually had a positive impact so far on any Aussie currencies. We can see here Aussie dollar up by 0.66%. A bit of a reversal shaping following quite a horrible move lower actually on that. If we take a look at some of the others, it's a similar sort of theme. Big moves to the downside, but a decent move higher in the last 24 hours or so following this central bank action in Australia. If we take a look at Euro Oz, not much going on there, but yeah, all in all, been pretty positive for Aussie. Taking a look at indices then, very quickly before we hand over to Steve for a look at commodities and cryptos. Let's take a look at Nasdaq first of all. So yesterday it was under pressure, but looks as though it closed actually better off on the session. We did make a marginal new low. We took out the low that we posted on the 26th of April there, but managed to have a bit of a recovery into the close. So we can redraw those fib levels just for some reference. Overall, still remains under pressure. Still looks like we've got a big rounded kind of top taking shape here on the Nasdaq. So for me, the pressure remains on the downside there. If we take a look at the S&P 500, we can see that had a big move to the downside, taking out these support levels here at 41.38 and 41.06. But a decent recovery, posted quite an impressive hammer candle actually there into the close yesterday. So that will provide some encouragement, although we haven't seen a huge amount of follow through in the early hours of trading there. If we take a look at the Aussie market following the rate decision, nothing really changed there. Still below this big level of resistance here. And while that remains the case, I think we're going to continue to see quite choppy trading. And if we take a look at the FTSE 100, that wakes up from an extra day off this week, is on the front foot, but not a lot going on. Still expecting choppy price action there too. So Steve, I'll hand it over to you now if you want to take over and run us through some markets.
Yeah, sure, mate. I'll take a look at cryptocurrencies first. Take a look at Bitcoin. Give you a reminder of what we're seeing on the weekly chart. Still in this corrective channel formation. And within this overall bearish formation, so the medium longer term, we still are negative on cryptocurrency while we remain below this 50,000 level. We're under a little bit of pressure over the last 4 or 5 weeks. It's been negative closes overall. And we can see yesterday we had an attempted rally which failed. We're at the bottom of this channel, so there should be a little bit of support around these levels, just below 37,000, 36,500, and as long as we remain above there, we have potential for a little bit of a bounce. But a break of this level should open up the downside. Let me take a look at this 4-hour chart. I've redrawn this supportive line to take the three points into consideration with this upward trending support line. Let me get rid of this triangle formation for a second. And so yeah, we've just bounced off supports here, so this looks slightly positive, as we say, but we need to recapture ground above the 40,700, 42,800, and above that, obviously, as we say, that the real resistance level coming in at 48,234. A break below here should open up a further dip towards 34,300. So start of the week, levels to watch quite closely. Bitcoin on the back foot. Diving across to gold. Gold has actually broken low. It's a move we've been looking for a few weeks now. We formed this head and shoulders formation. This is a 4-hour chart. Show this quite complex head and shoulders formation. And we had the breakdown below the neckline. We had a retest of resistance. We got up to $1,920 and then continued the break lower. We managed to break down below the 1872 support and now trading at 1854, which if we go back all the way to February this year, That's where we had support, and previous to that we had resistance in on the 25th of January. We can see here around about these levels. So key support here. A break below here really opens up a full assault on the 1780 support area, which you know, we can go all the way back to late Jan and early Jan to see where we found support there. But the measured move target of this formation, see, now we can confirm the break, is all the way down at 1725, which is the sort of like the real next major level after the 1780. So really opening up to the downside on gold. With Russia-Ukraine situation still very much in the mix, it looks like gold has been forced lower based on the dollar, probably still looking pretty strong. On oil, we've got potential from further upside on oil. Again, a bit of a complex inverse head and shoulders this time, where we've retested the right shoulder, and we saw a really decent rally yesterday around about 3 o'clock. Really decent rally higher, just stalling ever so slightly now, but further upside if we manage to break above the 105, the 107, and then the main resistance coming in at 109 on the WTI crude oil. The levels to watch on Brent crude oil are really 109.70, trading around 106.22 now, and 113.87. So they're levels to watch on the upside. That covers that about it really on the commodity side of things. Cryptos.
Okay, thanks. Right, so we can now take a look at the gun to the head trades that we did last week. So it feels like forever ago, but we had a long trade on cable, which was from me, which was 32 ticks on side on the close at 9 o'clock. Just to reiterate, well, I'll come back to it in a minute. We'll, Bitcoin, Steve, you were stopped out on that, and Jamie had a win on platinum. Just to sort of go over what it is that we do here. So we make a live call on the videos each trading day. We don't put too much thought into them. We just sort of have a look at charts quickly and think, you know, is there an opportunity there to maybe make something between now and 9 p.m. UK time today, or when the stop or the target is hit is when we close these ideas out. They're all placed at market. Each idea must have a stop and a target. And as you can see from the spreadsheet I just showed on the screen, we continue to manage the performance and monitor the performance, on those. All these ideas are actually placed directly onto our TradingView profile. So if anybody wants to check them out, they can do that by simply checking this out on TradingView. So, Steve, anything that's sticking out to you at the minute on the charts, or do you want me to have a go?
Yeah, you have a go, Joe. Go on.
Okay. I'm going to take a look at Aussie Swiss actually. Now, obviously, big morning for the Aussie currency because of the rate decision that we saw come out of Australia. It was above what was expected, or more than what was expected. And as a result, we saw a decent move higher on the Aussie currency. Now, it hasn't really kicked on. So that kind of hesitation, I suppose, for me is maybe a bit of an opportunity. So this is Aussie Swiss. This is an hourly chart. So we can see the big spike to the upside on the back of the announcement earlier today. If we look for a very short term fib setup, we can see we've got a 61.8% fib level here, in line pretty much with this previous swing high, and we've stalled into that. So for me, I think we might not get any more upside on that today. So I'm going to attempt to sell it at a current price of 69.44. I'm going to target a move down to these previous swing lows here at 68.23, and I'm going to place reasonably tight stop just above the highs that we've already seen this morning at 69.86. So looking for 2.81 R on that one today.
Nice one.
Let's see how it goes. Hopefully that gave you enough time, Steve.
Definitely not. No.
Okay.
I'm sort of like torn between selling gold and indices, which you know I like to sell them, but after yesterday's recovery, it almost looks like the wrong thing to do. So I might actually go for a buy trade idea. So I'm going to go for a buy trade idea in indices, it's going to be in the FTSE. If we look at the weekly chart, there's a big doji candle posted on the week, bit of sign of indecision after the sell-off. And yesterday, again, we saw a bit of indecision followed by a little bit of a push to the upside this morning. This looks like a little bit of a bottom on the 1 hour chart. Looks like a nice potential for further upside. So I'm going to go for here. I'm going to buy FTSE here. Going to have the stop quite tight. Really need to tighten that up a bit. And look for a move back up towards the previous resistance. So I am getting long. Let me just get the right levels here. Getting long in FTSE 75.06, targeting a move to 75.56, so 50 ticks on the upside with a stop at 74.86. So a very tight stop in FTSE. That's my gun to head trade idea today.
Cool. So just so you know, these are being published directly onto our TradingView profile, as you can see here, just writing out that Aussie Swiss idea, and Steve will do the same for his, and they'll be available to view in a moment or so. In terms of what to expect for the rest of the day, we have some US JOLTS data, job data due out at 3 o'clock this afternoon UK time. But the main events this week, as you can see below, we've got central bank action from the Federal Reserve on the 4th, where they'll be talking about policy decision. We are expecting an aggressive move there from the Federal Reserve by 0.5% on interest rates. The following day, we have the Bank of England policy decision. They are also expected to take some action as well. Then on Friday, we have the employment report from the US and Canada. So that's non-farm payrolls in the US, which is obviously well watched. So plenty of data to keep us interested this week. And I think, Steve, that's pretty much it. We haven't covered any stocks today because Jamie's not in. But if he's all good tomorrow, then we'll take a look at some stocks as well.
Yeah, lovely.
Lovely. Okay, well, have a great day, everybody. Best of luck if you're trading, and we'll be back tomorrow.
Yep, see you later.
Goodbye.